Hello everyone, this is today's video analysis for April 29, 2019. Today we're taking a look at the GBPUSD, Greater British Pound versus US dollar for today's trade analysis. Looking here at the daily time frame, we can see the current market is finding support right around 1.2890, 2860. That's the yellow shaded area, right about the middle of the chart at the bottom of this blue box that you see over here on the right hand side. If we look back in time, we have seen the market in this area before. Let's actually draw in another circle right here, this black circle here. So we have the red circle showing resistance into the green zone, support at the yellow zone, eventually breaking the blue circle, going down to the orange shaded area, 128. 1.2775. The black circle just before that shows resistance at the green zone, support at the yellow zone, and I'm sure we could go back in time and find some more areas like that. Something else interesting about the green shaded area, 1.295085, is that's where the two moving averages on this chart merge together. The 100 period moving average is the green line, 200 period is the blue line, and you can see they're merging together right here into that 129.50 or so level, improving our confidence in that as a resistance level. Of course, the black trend line coming down from the top also improves the confidence that this green shaded area would be a resistance level for the GBPUSD right now. So we know that with some pretty decent confidence that the green zone is resistance, the yellow zone is support, given the parameters of history that we see along those colored shaded areas. Even these black circles here show support into that green zone. We all know that support helps us identify future resistance. So we've identified these levels clearly as our decision points in the market. Decision points where we would look for entries into the market with lower risk and higher reward. Let's go ahead and zoom it in a little bit. And as you can see, there it is, the blue box zoomed in like this. You can see what the market's been doing for the past at least 4 days, which is clearly finding support here at the yellow shaded area and resistance at the green zone. The trend is down. That's not too hard to see as long as we have that black trend line in there, lower highs and lower lows. So if we're going to trade the direction of the trend, again, that comes down to selling the resistance level and selling into the green shaded area and the moving averages that you see here on the chart. If we just want a historical example about similar situation, is this black box here between the blue and the purple shaded area here on the chart. The blue zone being resistance, 1, 2, 3, 4, 5, 6, 7, 8 days. The market found resistance there, 3105. Eventually turning lower, breaking through support and going and making a new low. So in a very similar situation, that's what we're going to be looking at, this blue box down here and the green shaded area. We're looking at this to become our resistance. We know what the risk is. The risk is we don't want it to get above this green zone. So the risk is it breaks back above the green zone and starts moving back higher again. The trend changes. So we're going to follow the trend. We're going to look for the market to stay under the green zone, the black trend line, the two moving averages, and we're going to look for shorts into resistance with our stop loss just above in case the market decides to change its mind and go back in the other direction. 4-hour time frame doesn't really change that at all. We can see already the market today finding some resistance very close to 129.50. I don't think you want to sell it right now. We're halfway between the resistance and support. So selling halfway between the resistance and support carries higher risk. If this red line up here represents your stop loss or your risk, then it's farther away right now, so it's higher risk than if you wait for the market to bump its head into the resistance. So very similar to what happened up here at the black box and the blue zone. If I'm looking to go short, I want it to be as close as possible, maybe even inside that green zone, targeting the yellow zone, and a continuation of that downtrend. Breaking through the yellow zone would even see it go lower. And right now the risk is a break above. Now if you're a buyer and looking for this to go up, I just don't think there's any real evidence yet that we should be doing that. The trend is down. We're under the moving averages. We're under the resistance. There's no change in the trend pattern. So I don't think buying is really part of the scenario yet. It could become that at the yellow zone over time, but it's not there yet. So if anything, today the opportunity is selling close or inside that green zone for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.